Hello everyone, welcome to this talk. Today we are going to explore a crucial topic that can save you a lot of money and headache. We all want our investments to grow, right? But, beware. Not all investments are equally profitable, and making mistakes in this area can be costly. So, get ready for an informative and detailed talk that will help you avoid those mistakes and make smarter financial decisions. First, I want to talk about an investment that is often perceived as safe, but can be extremely unprofitable: real estate. Yes, you heard that right. Real estate may seem like a solid investment because of its appreciation history, but that's not always the case. The real estate market is cyclical and can experience bubbles that cause prices to rise artificially. Buying at the top of a bubble can result in a significant loss when the bubble bursts. In addition, maintenance costs, taxes, the possibility of buying above market value, not being rented because it is in a bad area, or having your home occupied can drastically reduce your returns. Second, let's talk about individual stocks. Many people are attracted to the idea of buying shares of a company they believe will be the next big thing. The problem is that individual stocks are highly volatile and can lead to substantial losses. In addition, it is extremely difficult to predict which company will be successful over the long term. Even companies that appear solid can fall out of favor due to mismanagement, legal problems, or market changes. Third, let's consider cryptocurrencies. Yes, the rise of cryptos has been impressive in recent years, but they have also proven to be extremely volatile. People who invested in Bitcoin at its peak in 2017 saw their investment plummet by more than 80% in a matter of months. In addition, the cryptocurrency market is full of scams and low-quality projects that can cause you to lose all your money. Fourth, let's talk about short-term investments. Many people are looking for quick profits and get involved in day trading or short-term speculation. The problem with this is that it involves a high degree of risk and can lead to impulsive decisions based on emotions rather than sound fundamentals. In addition, short-term commissions and taxes can eat up a large portion of your profits. Fifth, I want to mention high-cost investments. This includes mutual funds and index funds with high expenses, as well as financial advisors who charge exorbitant fees. These costs can drastically reduce your returns over time. It is important to research and choose investments with low costs to maximize your net returns. Sixth, pyramid and Ponzi schemes. These are fraudulent schemes that promise extraordinary returns but are actually designed to take investors' money and disappear. Falling for one of these can lead to the total loss of your investments. Seventh, investments without diversification. Putting all your eggs in one basket is risky. If you invest all your money in one stock, sector, or asset and that market suffers a crash, you can lose everything. Diversification, or spreading your investments across different asset classes, can reduce risk. Eighth, let's talk about emotional investing. This occurs when people invest in something because they feel a strong emotional connection or because someone convinced them without solid evidence. Financial decisions should be based on data and analysis, not emotions. Ninth, fad investments. Sometimes certain assets or strategies suddenly become popular, which can lead to a price bubble. Investing in something just because it is trendy can result in losses when the trend changes. 10th, investments without understanding. Many people invest in things they do not fully understand. This is dangerous, because if you don't understand how your investment works, you can't make informed decisions or assess the risks properly. In short, there are many investments that may not be profitable if not managed carefully and based on a solid understanding. It is crucial to research, diversify, avoid impulsive emotions and avoid fads. Remember that smart investing is a long-term game. It is always advisable to consult a financial advisor before making important decisions. Thank you for joining this talk, and I hope this information will help you make more informed and profitable financial decisions in the future.